Hello everyone. Last night, US Fed reduced the 25 basis point US interest rate, which is widely anticipated. Then there was a follow-up press conference where the Fed chairman discussed about inflation, employment and future guidance, etc. So first, let's discuss those in detail along with our regular pre-market report for today, 8th November 2024 for the Indian stock market in terms of Nifty and Bank Nifty. I know lately Indian market is not following any global market. It's on its own terms, but when it starts to align with the world, then at that time we need to be ready. So without delay, let's get started. As most analysts predicted and expected, last night Fed reduced their interest rate to 4.75% from earlier 5%. Then after that, Fed chairman Jerome Powell had the press conference. If anyone fancies seeing the whole video, please have a go. I will attach the link in the pinned comment. Basically, in the press conference, after a quick briefing, it was just question and answer session. So rather explaining all the questions, we'll discuss in the topic wise. First, about inflation. Various analysts questioned Fed chairman how he said inflation was dropping, provided after July PC inflation dropped to 2.1%, which is good. But the problem, core inflation was still high. It was hovering around 2.7%. And what was his view about it? For this, he explained very good way, and it was also one of the very important reason why yesterday night US market reacted positively. Then regarding the answer, he said whatever data released was the 12-month average PC inflation. For example, the September month core PC inflation 2.7% was the average of last 12 months. However, he said he got the data the last immediate 3-month and 6-month average was only 2.3%. So the 2.7% high core PC inflation was due to the 2023 high PC inflation base effect. Hence, in actual, inflation was not high. Then he went further one step into the details. Like in the core PC inflation calculation, 80% weightage is non-housing services and goods and 20% is housing services. This 80% weightage non-housing services and goods inflation was very low and it was in the low range like in the early 2000s. So the persistent inflation problem is mainly from this 20% remaining housing services. And even in that housing services also, whoever newly renting, they come in terms with a new low inflation. But the historical lease, when they renew that now, which in turn increasing 20 to 30%. So Fed chairman explained that those historical agreement inflation catching up is what making the inflation to reduce slowly, which they cannot control that. For that, wages has to grow and that requires 2 years. I hope everyone able to follow me. Even in my own case, for this my present house, at present I'm paying mortgage of roughly around £700 every month. That in July next year, for the present interest rate, I'm afraid it might increase to £1,200 to £1,300 and I'm already worrying for that. So I'm hoping before July, either Bank of England has to reduce the interest significantly or somehow all my investor stocks has to increase to that level, and the probability of both very small. Anyway, jokes apart, in my case, paying mortgage every month £700 to £1,200 is like above 70% personal inflation increase. So that's what he was referring. Renewing of all those old housing related lease will take time. Overall, it's a very dovish statement about inflation. Hence, in the next 2 months, market might give some importance to the housing inflation. Then second, most question was related to the employment. For that, Fed chairman mentioned in a way, at present his monetary policy is revolving around employment. Like the present unemployment rate around low 4% is what he is targeting and he wants to maintain this level. Any deterioration of unemployment like increasing above 4.5% is completely unwelcoming. So he said he is ready to quicken the interest rate cut phase if the employment data demands means. Again, another very straightforward dovish comment. Then the third most question was revolved around the US political changes and its impact on the monetary policy. Like most reporters' questions, what if there will be a tax cut and tariff increase as in the Trump political manifest. For that, he said they got a tool and model where they input all those if it's happened like legislation passed means. And also he said there were thousands of input and this tax cut or tariff increase is one of those variable, so he don't need to worry about that. Then finally 2-3 reporters asked this that Trump and Trump campaign had been critics of his action over last year, so if they asked him to resign, will he resign the Fed chairman position? For that he said very strongly no, and legally it's not allowed in the US. So that's it. That's the high level summary of his press conference. Basically, he said everything is under control and so far he's happy about the progress. For that, for now he thinks Fed needs 25 basis point interest rate cut. So they did that. About the future rate cut, they haven't decided any. Now because of his super dovish comment, last night US market closed positive. In the end, Dow Jones closed flat but S&P 500 up by 0.74% and Nasdaq rallied 1.51%. In case of VIX, after reaching over 21 early this week, now it also collapsed to below 15. Regarding oil, because of hurricane in US, it increased to 1%. At the time of this video, WTI crude trading around $72 per barrel and Brent crude trading at $75.5 per barrel. And to some extent, US market positivity was transferred to GIFT Nifty. Early morning today, it closed at 24,332, equating the premium of 70. For now, it's indicating gap up opening of over 40 to 60 points. Then coming to Indian ADR, Infosys alone closed positive, all other three closed negative. However, if we calculate the arbitrage, both the IT stocks in response to the rate cut indicating the positive 1%, but both banks indicating above 1% negative arbitrage. As a summary, Trump election and last night Fed chairman dovish comment all improved the global momentum. So our IT ADR also indicating positive trade. However, GIFT Nifty indicating only mild positive and banks ADR and Reliance GDR looks further negative. Just for info, yesterday too FI was net sellers as they net sold for 4,900 crore rupees, and to support the market, DIA net bought only for 1,790 crore rupees. In addition, still in the future index, FII holding 75% open interest on the short side and proprietary traders increased their short position to 66%. Those were the real concerns. About the things to look out, SBI, Tata Motors, PFC, LIC, Vedanta, Ola Electric, Ashok Leyland, India Cement, MRF and Info Edge are some of the major Indian companies' earnings results are still released today. Regarding macro, today is EU Leaders Summit. Then in the aftermarket hours for US, Michigan future inflation expectation and some FOMC member speech are some of the items we need to keep an eye out today. Coming to technical, Nifty opened flat. Then it was under pressure throughout the session and also closed below 24,200, thus erasing all the previous couple of sessions increase. And thus on the daily chart, Nifty formed a long bearish candlestick pattern with lower high, lower low formation. Then in addition, it remained at the lower band of the Bollinger Band and closed below 10 and 100-day exponential moving average with above average volume, which all indicating negative sign. Hence, until Nifty decisively closes above all key moving averages, the consolidation might continue in the upcoming sessions. The next support is at the psychological 24,000 mark, followed by 23,800, the recent low being a crucial support. On the higher side, 24,500 is expected to be a key hurdle. In case of Bank Nifty, it opened 60 points gap down and also saw a downtrend similar to Nifty, then closed at below 52,000. Thus, on the daily chart, Bank Nifty formed a bearish candlestick pattern with lower high, lower low formation. However, on the positive aspect, Bank Nifty still sustained above all key moving averages and MACD momentum indicator climbed above the zero line with a positive crossover. Hence, now Bank Nifty has to hold above 51,750 zone for a bounce towards 52,250 and then 52,500 level. A failure to hold above the same could see some weakness towards 51,500 and then 15,250 zone. On the monthly options front, the maximum call option open interest was at 25,000 strike, followed by 24,500 with maximum new call option writing at 24,300 strike, then 24,400 and 24,500. On the put side, the maximum open interest was at 23,000 strike, followed by 24,000 with maximum new put option writing at 24,300 strike and then 24,200 strike. Thus, from options data, it's indicated that 24,500 is likely to be a key hurdle on the higher side, while the support is at 24,000. So that's all in this video. Hope you all got some information. Please consider subscribing to the channel and liking the video so that it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investment decision based on this, as I'm not a SEBI registered advisor. I'm doing this for me and viewers' educational purpose only. Thanks for watching.